Hey, what's up, guys? Quick mic check. Mic check. All right, we're good. All right, let's do this. I'm gonna hit the record button so you guys can watch this later. All right, record is on. All right. See if I can get rid of this. Okay, here we go. Zoom in. Man, we're lagging a little bit again. I think that new PC comes tomorrow, though, guys. Hopefully, fingers crossed, that's the case. All right, so Bitcoin up on the screen. We're long, boys. We're doing it again. Up only time. This is a 4-hour chart, okay? So basically what we have going on here is this is kind of that buy zone that we had always kind of been watching between 48 and like 46, 45.5. So Bitcoin wicked down in here earlier today to about 46.8. So when that happened, on the RSI, you could see we actually painted a 3x bullish divergence, and that's what we were talking about last night as well on the stream. I know we didn't do a lot of charting, but we did chart Bitcoin. I think that was about it, maybe ETH. But we talked about this, guys. Last night we only had this low, right? Because we just painted this wick, okay? We didn't have this wick last night. All you had was this sideways, and you had this previous low, okay? So we had at that time bullish divergence on both the RSI and the MACD up to that point, right? Where the cursor lies up the line. Okay, so we said, look, guys, there's a slight possibility we get one slightly lower low, dump further into the zone, grab a few more of our bids that were still laying there. Remember, we didn't pull those bids. We left them layered. Patience. Earlier today, grabbing some nug, fill some bids, right? So that's how it goes. All right, so now pay attention. On the RSI, it's really, really clear, right? Because you had this really, really low down here on the 18th when you got the initial dump, right? That we're looking with this price action. Okay, follow the price action at the same time as the relative strength levels. Okay, so we're down here at the absolute lows. We're basically at 25 on the RSI. Okay, as we put in another lower low on price and got to that 48, 47.5 area on April 23rd, the RSI was now at 26, putting in still a low level, but a slightly higher level of relative strength than previously on April 18th, while simultaneously price is putting in lower lows, right? So that is your bullish divergence. Basically, we had, and then what we were saying is, look, let's do it again, right? So we again put in a lower low on price. So for a three times bullish divergence now, and now you were up at around 37 on the RSI. So you're definitely starting to make your way up into neutral territory, which is basically between kind of 30 and 60s, really neutral areas, kind of gray area, but definitely nice to be above this 50. Basically, guys, if you look at this RSI, think of like the 30 and the 70 line as like a big channel, right? Like a big range. The same way we would paint a range on price action, okay? So when this RSI gets back above this midpoint, whoops, let me bring that down a little. About right there. Okay, so when this RSI right here gets back above this midpoint, as you see it right there, that's basically kind of really signaling that the bulls are attempting to take this thing back over. And remember, guys, we could stay overbought up here for long periods of time. Similar how we stayed oversold down here for couple days, right? 5-6 days, right? It could, you could maintain those low levels when the bears are dumping this, right? But as the relative strength started to change on the bears, lower levels of relative strength, divergence paints, bulls start to, bids come in, this thing's back above 50. We're still in neutral ground, right? So by neutral territory, I was basically saying, I mean, really just anywhere between like this 60 and 40 area. You're still kind of just in, this is where it's like almost like the sideways, the chop, right? People are, price is just trying to figure out itself, right? Where are the bids coming from? Supply, demand, the bots are fighting, algos are fighting, buyers stepping in, sellers stepping in, so it's just this madhouse in the middle. But at some point, somebody takes it out of this middle kind of gray area and takes the ball over, you know what I mean? Gets back on offense and really runs price in their direction. So while we're in the middle here, anything could still go. This is the bears' last chance right here. The bears better fucking step back in if they want to continue to push this down into the really low 40K area. I really don't see that. I really don't see that happening. Not with what we're going to talk about here over the next several minutes, okay? So basically, we're in this gray zone. Ideally, we want to see, some back tests of that 50 maybe, but ultimately break back above the 60 level on the RSI and make our way towards the range high, if you think about it, right? In quotes, range high of the RSI. Get ourselves overbought again, and at that point, we'll look to exit our long position more than likely, because the daily still looks like shit, to be honest. Okay, guys, we gotta remember this is only a 4 hour. This isn't gonna take Bitcoin to $1 million, guys. This is the 4 hour. Yes, can we get some good price action off of it? Sure, absolutely. But we're not gonna change the world on the 4 hour. Okay, so live within your means. Understand when it's over, okay? So let's look at let's look a little deeper now. Oh, now that we talked about the RSI, let's go to the MACD real quick. Okay, so there was a question in the chat about, okay, basically what they were looking to see. Ideally, you do see this. It's not uncommon. Right here where it started painting these two kind of waning white candles, a white on the oscillator here on the MACD on the positive momentum side. Right there, you would have expected price to kind of, even the momentum to dip down just a little bit and put in a little bit of negative momentum as you got that wick, right? But it didn't. You see what I'm saying? And what would that have done if you did that? You would have still had the divergence, right? It would have just been like this, like the RSI did, right? You would have seen that on the MACD as well. And you got the price action for it. You got the lower low, right? You got the lower low. So what's up, right? What's up, Duck? Well, look, guys, this is good. So when we look at this, basically what you're looking at here is, even though the bears pushed price down one final time, really all it probably really was is a couple things. It was a square up, it was a touch of the 786, which we'll go over here in a bit, and it was just sweeping stops below those two candle closes on the 23rd. You know what I mean? So, and your relative strength held the way it should have, right? Putting in higher levels of relative strength. And as we're talking about on that MACD, you see this. Let me zoom in. So we're talking about this wick, right? That just happened. So we're going to look right here, okay? So we'll zoom in on the MACD. All right, guys, here we go. You got basically the bears right here were starting to push this down, got this wick to go down, and they got price pushed down, but it was so weak. The momentum was so weak by the bears at that point that they were unable to even paint even one tick of a red oscillator. Sometimes they'll just paint a little tick, but they couldn't even put a fucking little tick mark on it, right? They really couldn't even make the MACD positive island. They really didn't even make it do anything, to be honest. You see what I mean? It was like a couple little white waning indecision kind of moments for about 8 hours, and then that was it. Wham, positive momentum engulfs everything from the past highest levels of positive momentum on the MACD, which is at, basically like the 320 level, whatever you want to call that, since back on the 14th, right? We haven't been this high since back on the April 14th. So, over 10, 12 days since you've seen this kind of positive momentum. And look at the candle it produced, guys. Look at the engulfing madness. Basically engulfed the previous like 3 days all in just one 4-hour candle. And this previous candle was bought up dramatically as well. So this is actually still 3x bullish divergence on the MACD as well. Even though you didn't paint any negative momentum, it's okay. This is good. This is better than that, okay? Because it's kind of more, it's more hidden, it's more subtle. You got to kind of notice it, right? People are waiting for that lower dip. They're still waiting for 43. They're like, no, look, it's going to turn over. It's going to paint red. Well, not always, okay? All right, so now let's look a little deeper at this wick. Let's get rid of the oscillators. Now you guys know where we are in the oscillators, okay? We got bullish divergence on both the RSI and the MACD, okay? So check box 1, check box 2. All right, now what were we talking about with this 786? We're talking about this duck's birthday low, February 28th, guys. The duck birthday low. That's when on my birthday price said Valhalla. Okay, boom. All right. So what we're looking at is this big cipher. Okay. Well, actually, I'm going to paint the fib by itself first, naked fib. Okay. So we're going to fib from the February 28th low to the all-time high on April 14th at basically just shy of 65K. All right, guys, look at this. 786. Okay. You got the one touch, two touch, 786. Okay. That's the pattern reversal zone fib that you're looking for on the harmonic, which is a bullish cipher. So now let's paint the harmonic on top of it. So we're going to go February 28 low, X, A high, March 14th. Then we had a 618 B low. Nice little 618. Look at that. Beautiful. And then we painted the all-time high, 65K, just shy of it, 1272. And that would be painting a cipher. We would be looking for 786 on the pattern completion zone, which was technically right here. So what you guys got is a right there. Okay, look at this. 786, okay? See that wick? All right, so now that you know where that 786 is coming from, I'm going to clean that up, okay? So what I will do real quick is just repaint this. The 786 came from this anchor point low to the C anchor point high, okay, guys? That's where you get the 786 right here, okay? So what I'm going to do next is I'm going to take the next discernible swing low, B anchor point, 618 retracement from X to A, and I'm going to fib from the March 25th low to the April 14th all-time high, and you're going to also see this 1272 right in the same zone, guys. This is this box. We just layer, look, we filled in the first time, gets us a little price action just in case that's it. Sometimes that's it, guys. Sometimes that's it, okay? But as we kind of talked about, and we're not afraid of it. In fact, all it did was increase our holdings and increase our dollar cost average into a better position than the previous one. This was the best you could have gotten. Right here in this little box, we bought it. This was the best you could have gotten at that given moment. Nothing I could do for you down here at that time, okay? But we left bids, and look, we filled a little more. We could have filled a little more too. They're still there. I'll cancel them in a while. Just chilling right now. No harm. Just hanging out. All right. So look, we had a 1272 from the B to the C high. Okay, guys. So you have coinciding harmonics. Coinciding fibs. Okay. Coinciding fib levels from two discernible swing high, swing low anchor points. At the same time, you have 3x bullish divergence on the MACD, 3x bullish divergence on the RSI. And not only are you at coinciding fibs, but that's the PRZ, pattern reversal zone D, long entry target of this purple bullish cipher, guys. All right, we're stacking the edge. You see what I mean? We're stacking the edge. Still we go long? Absolutely. Never afraid. Try again, right? You never be scared. Can't be afraid of it. You just got to do what you see, what's happening in front of you, and that's it, guys. That's all we can do. React to, call it like we see it. Okay. So let's bring it back in. Let's bring it back in. Bring it in. Okay. So look, we have this large cipher. I'm gonna get rid of the background, clean it up just like this. Okay, guys. So I'm also gonna get rid of this little 786 touch. I'm gonna get rid of this zone. We're long. Okay, we're long. We understand that. All right. Next, I'm gonna go ahead and clean up this divergence as well. I just wanna not clutter as we continue to paint more variables. Okay. Alright guys, so now we have another harmonic in play. We have a shark. We talked about this last night too. X, A, B, and we could go down here, 1618. 1618. This could have still went a little more to that 1272, right? It was right. It was tight. It was right there. We're going to take this just fine. 1618. This is now going to be an 886, guys. We're looking for an 886 here. 886. 886. That is right about here. 63,300. Okay. Let's fib it. You can see it a little more clearly as well this way sometimes. I know some of you asked for this. There you go, guys. So here's this 886 on the fib and the 886 on the harmonic. They're at two different areas, but it doesn't matter. We don't care about a specific price to the penny. We always layer in zones. So all we're doing is creating a zone for ourselves. You see that, guys? Between the harmonic 886 and the fib 886. Yes, they're the same thing. And they're off by like $400, guys. We're talking about an asset worth $63,000, and you're worried about $400. It doesn't work that way, okay? All right, guys. So look, this is a shark. Let's identify this a little more clearly. Shark's white, okay, guys. The cipher is purple. Shark white. Okay. Let's talk about the shark. Okay. When we get to this 886. Huge red flags are going to come up. We got to be really alert. We got to bring this stop, which at this point you can have down here below the wick. Okay, guys? You can put a stop there right now. There's nothing wrong with that. Or you can have more bids. It's up to you. It's up to you. But what I'm trying to say with this stop is as price is approaching this 886, we want this stop to at some point get below the A, which would be, you see the A on the white shark? It's about right here, basically 50K. So use 50K as that next stop. We want to get the stop to here, but it's too soon. It's too soon. We're too close to price action. You'll get stopped out like this. Too soon. So you got to be patient. Leave it back down here, or leave some bids and leave this stop just way out of play at this point. Just use bids at the moment as a stop. Keep this sucker. I mean, look, you're not going to see this. But you just don't want to get stopped out being too cautious too soon is all I'm trying to say. But in the long run, by the time you get to this 886, this stop needs to be way up there. Okay, guys? By the time you get to this 886, this stop needs to be high. You need to be securing these gains. Okay? Just keep that in mind, because because this 886 could be it. That a lot of bullshit can happen right there, guys. This is going to be a lower high, or a lower high than the all-time high. Okay, the all-time high is basically 65. This can be at 63. Okay, so this kind of thing could happen, guys. So don't give up them gains. Okay, that's all I'm trying to tell you. But what else could happen? Okay, let's talk about what else could happen. That's the bearish scenario, where a bearish shark in white, you're painting a bearish harmonic, okay? A bearish shark will give you bearish price action. But we want to see like bearish divergence on the oscillators when we're here, if that's going to be the case. If the oscillators aren't lining up yet, it may not be time. Now, what would happen to a shark? The shark starts at the 886, but then it could go to the 113, guys. Watch that. Watch the right here. Okay, look at this between X and D up here. 113 is basically right here. 66,700, guys. 66,700. Now, if you get this, by the time you get that, the shark is going to be fully developed, okay? At this point, based on where we currently are on price action, by the time you get from 50, this started at 47. By the time you get from 47 to 67, that's $20,000, guys. If we get that much price action to the upside, you're going to have bearish divergence. It's going to be over. When we get to 66.7, don't be fucking talking about 100K bullshit, okay? None of that, okay? Now, if you still want to stay bullish, here's how this can work out for you. A bearish shark at a 113 has the potential to morph into what we call a bullish 5-0 pattern. Okay, guys? So what will happen there is from the C low, 47 area, to what would be the current all-time high at this point, right here at 66.7, we would be looking for a 50% retrace back to 65,700. So I'll mark the level right here. 50% fib retrace. You see this 50? This also kind of lines up with this previous B. You see how that kind of makes ourselves, again, a zone to layer, right? Okay, guys. So let's look at this. Let's paint this gray. Okay. So what this is a 50% retrace where a bearish shark would morph into, at that point, a bullish 5-0. So this is where traders would re-enter a long position. And at this point, you're going to be looking for something interesting, right? You're going to be looking for, typically when you get these guys, it's like, okay, first target would be back at the highs, second target would sweep them. Okay? At this kind of price action and you morph into these 5-0s, a lot of times the oscillators will be painting, they'll be painting hidden bullish divergence, okay? So what we're going to be looking for right now, at these lows, you got bullish divergence, Class A bullish divergence. When we get to the 113, we'd be looking for Class A bearish divergence. When we get back to the 50, we'd be then looking for like Class C hidden bullish divergence, and that's where you go again. This one will fucking get everybody right here. Ooh, this is a nasty little booger. This 5-0 hidden divergence, ooh, every time it'll get them, every time. Every fucking time. So that's our play right now, guys. This is what we're watching out for. This is ideal scenario, because we don't really want to take this back to 20K, right? I mean, it would be nice if somehow we could justify 100K, but we don't talk about that until the charts are telling us that we can have it. Right now, even with all this, if all this plays out as bullish as possible, see this green line up here? That's probably about it. 75, probably not even, probably this area. What would this be? At this point, we'd be fibbing from the all-time high that doesn't exist to the new swing low that doesn't exist. And look at that paint. Damn, Duck, you're getting good with that shit. Almost hit that fucker without it even being there. Okay, 1618, sweep it all. This previous one, double top, it's like, okay, double top is in, but then it kind of staggers there, and when you hit it that third time, wham, you lose it. Boom, supply, the demand, or the supply dries up. Too much demand, right? At that point, people would be getting crazy again. You get these moon boys come in, push it up, and then here we probably exit again, short it again, wham, wreck them again. But anyways, this is all we're worried about at the moment, okay? We would really, really like to see 66.7, but again, we're going to be really throwing up the alarm, red, we're going to be on high alert at 63. Anything above 62, like, just be on alert, okay? Be on alert. Tight, stop. If you get stopped, fuck it. Doesn't matter. Because you'll get this 5-0, you'll get another entry, you'll go again. But lock that shit in. And if you can play it good enough, you might run it to here, okay? So maybe your stop is only worth a percentage of your total in the trade, right? Say, whatever this is, if it was 1 Bitcoin, well, your stop would maybe be worth, 0.4 Bitcoin. So when you get stopped right there, all you did was secure the gains of 0.4, and you still could have had 0.6 running. Just any numbers will work on that. It's just an example of the way you can use a stop that will still protect some capital, which that 40% at that point might have been your whole initial investment, and the 60 you could be running up to the 113 as just purely house money. It just depends what you're in for. Let me see here. Let me just make sure you guys can you guys still hear me? Just somebody throw something in the chat real quick. Alright, so Extreme Elements keeps timing out on us. Let's see. Yeah, we can. Okay, cool. Alright. Just want to make sure before we go too far. Alright guys, so Bitcoin bullish. And the crazy thing right here, guys, is when we painted this divergence right now, we're going to look at this on ETH. You notice how on Bitcoin right here, this was clearly bullish divergence, okay? Clearly bullish divergence. Now let's look at ETH. Can you see the difference here? Can you see how on ETH, this never was bullish divergence? This fucker was more of bullish convergence. You see how these oscillator, the higher levels of negative momentum and the higher levels of relative strength were converging in the direction of price action on Ethereum, guys. Even this wick low didn't do shit. This wick low put in positive momentum, guys. This is bullish. Bullish. This is accumulation at resistance, guys. We talk about it. 1 touch point, 2 touch point. Here comes number 3, and then Ethereum's gonna go to frickin' Valhalla, 3K. Valhalla for Ethereum on the 4 hour is $3,000, guys. Okay? So as long as Bitcoin holds up, and we got no indication of anything otherwise, right? We just talked about this. As long as Bitcoin holds up, Ethereum is even more bullish than Bitcoin right now. This asset is even better for you to be in a position than Bitcoin at the current moment. Okay? That convergence is it's stronger. It's like, look at all this selling that happened. Nasty $20 billion in liquidations, just puked. And Ethereum paints bullish convergence. Like, that's what's up, bro. So we gotta watch out here. This sucker is going to hit this line right here like a freight train, and it's about to happen at any moment. Really, like, you're basically developing some kind of here you go, some kind of upsloping trend line, right? And you're just this upsloping demand line, and you're reaching the supply line, this overhead supply line resistance at 2,500. So when Ethereum hits 2,500 again, what we want to see here is we want to see, what is it, guys? What is it? The old break, hook, and go. All right. So what are we talking about here for some of our newer viewers? Yes, could this freaking come back down here, touch us again? Sure. Who cares, guys? Who cares? But ultimately, what we want to see is break the 25, okay? Back test it, which was once previous extreme resistance as support, okay? Look at this previous resistance, guys. Huge, massive, dump, bleh, okay? If you can flip that, SR flip it, okay? That's how you do it, guys. This is how we do it, all right? Look, guys, we've been here before, guys. This is not our first rodeo, guys. Look, what do you see on the chart? What do you see? What's happening here? Okay? What's happening? Yes, of course, we got the convergence on the oscillators, okay? We went over that. That's cool. It's awesome. I'm not being sarcastic. It really is. It's cool. We like it. Okay, guys, let's clean this up. You see what's happening here, okay? What are you doing? Okay? Painting a low on price, okay? Slightly higher low on price. While at the same time, the oscillators in our favor, guys. We have a overhead supply line, 2,500, right? Our overhead resistance, critical overhead resistance. We've been painting this since the stream started, guys. This is nothing new. You guys have been seeing this since stream 1. Okay? I don't know what number we're on. I don't really keep track of it like that, but it's just, this shouldn't be new to you guys, right? We break, hook, and go above that overhead resistance, and we see highs. What are we going to see first? 1272. What's next? 1414. What's after that? 1618. Golden mean ratio. How do we get there? We have 2 fib points. We're going to overlay them. We're going to take the previous all-time high to low. Okay. Boom. 1618. 2925. Okay. That's our first area of interest. Bam. Mark it. Okay. Next. Clean it up. We're going to take the new all-time high to low. And what do we got, guys? Another 1618 golden mean ratio. Coinciding in an area between 2925 and 2975. This is our target area on Ethereum for take profits. You're going to layer out. Front run it if you want. It's never a bad thing. Okay, front run it a little bit, but ultimately just layer out all the way through that sucker. Front run 3K. 3K is going to be critical psychological round number for retail, right? So we want to get out before retail. We want to be getting out at that 29, 28 area, right? Front running that 3K area by a good $75. Okay. So, what kind of, even just from here, guys, look, it's nice little gains, okay? 20% on Ethereum, new all-time high. Nothing wrong with that, guys. Even a spot trader is making money here. You don't have to get greedy to make money, okay? So, if we don't like that this, okay, 2 things. We don't like that it's a higher high here in the middle for our harmonic, but we like that we put a higher high in here for our bullishness, because this is continuing to paint higher highs, higher lows, right? higher high, higher low. So if we were looking for some kind of harmonic, it would be a butterfly. The thing is you got this higher high here, right? A butterfly would have ideally liked to stay somewhere in this 886. Then you got the lower high, the higher low, and then you'd be targeting right here, guys, the 1618 on the butterfly would be somewhere like this, okay? So even though it's not a textbook butterfly, guys, you're still going to get some wave. The wave, okay, we're painting waves. It's just from, not Elliott waves, this is just waves, price action waves. From low to high, right? From high to low, from low to high, from high to low. It's just constant waves back and forth, back and forth. Harmonics are a form, the most advanced form of wave analysis. We're analyzing price action waves. Okay, guys? So even though we don't have a textbook harmonic, we do still have a lot of the other variables, okay? We're missing a critical one, yes, but it's okay because, the fibs still play out similar, right? The fibs coincide with the harmonic. The harmonic utilizes the fibs to create itself, but some people don't even know harmonics exist. So if you were just painting fibs, a lot of people are going to find this area. When everyone finds a similar area, you get a reaction in price, okay? Supply versus demand, right? So if there's more sellers step in at that area, price is going to reflect that, and we're going to see price action to the downside, okay? Which is why we want to secure gains at those levels, okay? Ultimately, guys, if you are not in an Ethereum trade right now, that's okay. No problem. Wait for the back test right here. Target the zone. We're going to look for a 3-to-1. See, 3-to-1. So you're looking for price to get up above this level. Hold this level. And that's going to be your next cue for entry. And then you could target the highs. Okay, guys? So, again, never FOMO. Never FOMO. There's always another trade. As long as you're patient, as long as you have, bullets in your chamber, right? You can't run out of capital, or else what are you going to do? But as long as you still have, capital preservation being our number one thing here, you're always able to enter into another opportune moment, right? The market's going to continuously provide you with endless opportunities to enrich yourself. It's up to you to just be there, be present in the moment, okay? That's it. Simply be present. Don't be greedy, just be present. Okay? So, next, we're going to go over to, this is Ethereum to Bitcoin, Ethereum to BTC on the 4-hour. Okay, guys, so check this out. This is interesting too, because like I was saying right now, Ethereum is more bullish than Bitcoin. We just went over Bitcoin to USDT, Ethereum to USDT. We just said Ethereum is looking better than Bitcoin. Okay, so now if I compare Ethereum to Bitcoin on the chart by itself, well, Ethereum should outperform Bitcoin here as well. So let's take a look at this. All right. Well, you see here we had these negative momentum islands here, where we had these lows, right? So from this previous negative momentum island, histogram island on the MACD, we bring this over here to the newly formed, even larger negative momentum island, okay? And while that was forming, guys, while this painted, what did price do? Well, from this low to where this island formed, price painted a higher high. So you might be like, well, what the fuck is that, Duck? Well, some of you may know. I hope some of you may know. I know a lot of you do. A lot of gangsters in the chat right now. So what you're looking at right here, guys, is the hidden bullish divergence that we'd be looking for later on that bullish 5-0. After that bearish shark morphs into that bullish 5-0 on Bitcoin, this is that kind of price action and oscillator divergence you'd be looking for. where basically you would see price come up here on Bitcoin, paints the shark, right, bearish shark, then it drops down 50% retracement, right, boom, and then you morph into a bullish 5-0, and at the same time you paint the hidden bullish divergence, and you double bottom at the 50% retracement with the hidden divergence, and you run again. The first target being an alt, right, the highs again, right, and then you dip again like you just did, and then you go sideways a little bit, and then when you hit it again, that's it, boom, 1272, bang, you're there, right? Where's that 1272 now coming from? It's coming from the current highs, right, to low. 1272, right there, bam, 0.049, basically 0.5, 0.05, that's where you're going, 0.05, okay, 0.05. So look guys, this is a hidden bullish divergence. Not only do you have it on the MACD, but you have it on the RSI. Bruh. And you have the ETH USDT painting all the bullish convergence, guys. ETH is ready to send this shit, okay? ETH, Russian Ethereum. Litecoin. Okay, Litecoin, like Bitcoin, is painting the bullish divergence. Okay, guys, where we have a low on price with a lower low, and you have higher levels of negative momentum on the MACD, higher levels of negative momentum on the RSI. Okay, guys. So what we're looking for here, you're getting a really nice engulfing candle. Again, just like Bitcoin, I think Bitcoin's engulfed all of this already, but Bitcoin's kind of up here somewhere. I don't know if it still is, but it did when we were there, okay? Anyways, guys, you're painting the similar shark here, okay? The reason being a sharky shark is because of this 1618 retrace down here. Where did you get a 1618? From this low wick to high? Oh, you got a 1414, 1414, which it can go between the 1272 all the way to the 1618. So that 1414 is just smack dab right in the middle. Okay. So what does that shark look like again? We saw this on Bitcoin, right? X, A, B, C low. Okay. 1414. What are we targeting? 886. Okay. Where's it at? 886, where you at? Okay, right about there. The shark says the 886 is at $325 for Litecoin. Okay, guys? 325 area. Now, let's throw the fib out there, okay? Let's fib from the all-time, I believe it's all-time high, whatever, local high, April 17th. It's irrelevant. Who gives a shit about previous price action like that to an extent? We live in the moment, guys. So I don't care if Litecoin used to be 10 grand. Right now, the previous local high was 335. All right. So again, look, 886 fib level, fib extension, right in the zone of the harmonic PRZ. There you have it on the shark. That's going to be a red flag area. Again, we talked about this on Bitcoin. What can happen here, guys? This could be it. That shark could say, that's it, 886, you're done. And you will not morph into a 5-0. You will not eat no more. Okay? You will die from here. Okay? That's it. But the oscillators will be the telltale sign. If the oscillators say we want more, well, then we get more. That means 113. So if we get to 113, now we could start looking for the morph. Okay? Now we could look to the 5-0. So the 113 puts us at 350. Guys, okay, so from that point we would worry about morphing down into this bearish sharky, morphing into a bullish 5-0 at the 50 and running the highs. Okay, how do we get that 50? That 50 is from the C low to what would be the new D high. And you'd be looking for this 50. It's a little deeper. It's right there. Okay? That's where you would morph into the 5-0. But you have to get that 113 first, guys. You got to get that 113. Okay. So let me My headset's blinking at me. Hold on one second, guys. Let me plug it in.